Bitcoin is forming a phenomenal pattern on this chart, which could lead to a massive breakout. And it stems from this kind of ascending triangle formation, but more so from keeping these highs. You see, the best thing that Bitcoin could possibly be doing at this stage in the market is exactly what we've been doing here, which is basically just trading sideways. Bitcoin entered the $62,000 price range and basically just kind of sideways between $63,000 and $61,000 here, which is absolutely fantastic because it allows Bitcoin to cool off a little bit, just kind of recuperate a bit of strength before continuing to trade higher. Now, obviously, I am still bearish on this chart, which is a really weird place for me to be, because even though I think this is absolutely ridiculous and this thing has to pull back, I have not been invalidated, all right? And that has been the backbone of my analysis for a really long time. That long position you guys have seen me in, I'm still in it, ladies and gents, and I just can't, I can't close it. I can't even sell my Bitcoin spot because look at that 1900% right now, right there. I haven't even seen that right there. Take a look at that 1900% on my Bitcoin long position. I can't close it even though I'm bearish because we haven't been invalidated. This is actually how you make money as a trader. So a lot of people don't actually get this. They don't graduate to this level of understanding of trading because they never actually make money. But in order to be a successful trader, when you start making money, you don't stand in front of that train and, try and stop it. You're just going to let it go for as long as you can and almost not question it. But you are still going to have an awareness, just like we have on this chart, that things are absolutely crazy. I'm going to be giving you some very balanced, grounded, realistic analysis in this video. So if you are excited for me, do me a favor and smash those likes up. But let me talk to you about the bullish stuff first, because there's a lot. This chart has a very bullish posture, and it needs to, it looks like it needs to kind of pump up. Obviously, we will get to the bearish stuff later because there are massive, massive caveats to this, and I'm very weary of the kind of opportunities to make money in this space right now. I think we're going to get much better opportunities when there's a little flush, if it comes, of course, because nothing is guaranteed, to give us much better entry levels on a lot of these coins. But let's get straight into this. And there's actually one thing that I want to cover with you, which is really exciting, and it's this potential pennant that Bitcoin is in right now, right? We've actually already seen a breakout out of this. It's coming off that 1 hour Ichimoku cloud, which is phenomenal. But if we actually measure the span of this triangle right here, that is a 7.3% triangle in terms of from the low to the high, and that does give us, from our breakout point, a speculative target of the mid $66,000 price range. Okay, so that is really knocking at the door of the all-time high. And just to point this out, by the way, we've been seeing triangles breaking out on this chart already. Like, here's an example from earlier in February, and then around mid-February, Bitcoin has been using this triangle, these triangles in very, very similar ways. Take note of how we form this triangle. The apex moves right into the EMA ribbon. Bam, we lift off. Form the triangle. We find support off the EMA ribbon. Bam, lift off. Form the triangle. Apex falls into the EMA ribbon. Bam, potential lift off. This one obviously hasn't quite played out yet. So that would be very interesting. And it's actually pretty well timed because the Monday open for the stock market and so on is basically just, 24 hours away now? So a little bit less than that even. So, that could definitely be something interesting. There are some things standing in Bitcoin's way, I think. If we take a look at the Fear and Greed Index here on Binance, especially for retail traders, you're going to see that, retail is majority long right now, and it has been for a good few days. We've got 1.3 on the long-short ratio, meaning there's 1.3 longs for every short here. And it's been positive for some time now, where we're seeing more longs than shorts. And of course, the Fear and Greed Index continues to paint a pretty, nasty picture here, because in terms of sentiment, we're also quite high up. So, these things get punished. And, you could choose to ignore that, and that's all you. But these things do get punished. And that's something we're going to be watching out for. But as it stands right now, we are forming these phenomenal patterns. And like I said, with some of these key indicators, we've got that beautiful 1 hour Ichimoku support bounce. We've got that beautiful 4 hour EMA support bounce as well. The market is right now primed for that potential move up. And if it doesn't happen, we do still have phenomenal support down here at about 60.5, 61. It really depends on where you want to draw these levels. But, these kind of price ranges definitely a nice range for Bitcoin. Now, if we're able to break above this price level here, right where we are right now at about $63,000, then that next key area is going to be our, kind of trend high, which sits pretty much square on at $64,000. So that would be very cool. That is something that we're going to be watching out for. You've got your potential fake out price action that could come all the way up here. So please keep an eye out for that. And I think honestly, a lot of this potential price action for Bitcoin now is going to depend on the S&P 500. We've seen a very nice breakout for the S&P 500 above its all-time high that it set back here in 2022. And, since then, we've just rocketed up really nicely. So if this is just going to continue moving up and up and up, then, what can you do? This is, it's probably going to drag Bitcoin up with it. But I've given you guys very, very well-timed warnings on the S&P 500 over the last couple of years. I'm going to give an attempt at doing that again right now. And if you are subscribed, you would have seen them, and you would have seen how actually stunningly accurate they were, and of course how that affected the crypto market as well. Absolutely critical stuff, ladies and gents. What we do have here on the S&P 500 is now a straight rally without a pullback, taking it up by 25%. And that's actually quite unusual. If we look for these really big rallies before we get these corrections, I mean, well, to be fair, this was a 62% crash, but this was also coming off the coronavirus market low. So that's something to keep in mind. But oftentimes, we're not actually pulling off something much bigger than this, right? We've got 20% here. I'm talking like without an interruption, right? This to me is a significant correction that starts here. Here's obviously, we're not getting, again, big exception here with this black swan up to this high or this high. But I mean, other than these, right, you're getting like significant consolidation starting here up to the high. We do go up by 40%, but consolidation, right? This is kind of where the market gets a chance to breathe. You don't see this particularly often. Like you are going to expect, like, for example, right here, some sort of a pullback taking place. And, it's not bad, right? It's a 6% pullback. And to kind of put that into perspective, 6% down would put us right at the previous all-time high, right? So I think, by many different accounts, we are due for a pullback. We've seen a really bullish few weeks here. In fact, if we look at this on the weekly time frame, it's kind of hard to find a pullback candle on this entire uptrend. And that is just, again, like you do have instances where things get kind of crazy, but they're not as, just clean cut aggressive as this right here. So I do think that this is actually really important and well worth keeping in mind at this stage in the market. This is definitely something which could end up being quite important because if this isn't going to continue, then you could be looking at quite nasty kind of pullbacks on their way in for the market. So that's something which I actually think is very important to keep in mind with the S&P 500. And again, the kind of bleed-on effect that could have for crypto could be absolutely massive, because you could be looking at, suddenly traditional finance markets aren't doing so well. And then the nasty result of that is if traditional finance isn't happy, there's just a lower kind of risk appetite in general in the space. The ETF narrative and all of that, you're not going to fight basic market psychology, right? Like if you've got a very safe asset, something that's been tried and tested for fucking decades, and then you've got Bitcoin, it's not gonna be so easy to justify massive risk in those other markets if the main safe ones are looking a little bit kind of treacherous, and that's something that we could end up seeing if those all-time highs start getting revisited for the S&P 500. So I think that's a really interesting and important approach to take. I do want to talk to you a little bit about a potential path up for Bitcoin, though. This one is definitely interesting, and what we could end up seeing here is, a kind of move up to that all-time high, for example, that $67,000 price level, followed by a pullback down to these kind of 61K areas and then bouncing up, right? And that would be a really, really nice kind of path up to grab some support on the way down and then continue to move up. And these are obviously fantastic backtest opportunities. These are where you actually make money quite well in these markets, especially if you're just kind of trading without bots and stuff like that. So, that is very, very cool. And I do want to highlight to you guys that if you are interested in seizing the opportunities in the market, then consider doing it with free capital that these exchanges will give you. We've got Bybit right here offering you up to $30,000 for free to trade with. That is free capital. Any profits you generate with that money are yours to keep. And they're also just going to give you a free $500 Bitcoin position as well with this link down below, which is super, super cool. That, again, is just a free position. You can throw it any direction you like, and it doesn't matter what happens because the profits are going to be yours to keep. So that is super, super cool. We've got brilliant non-KYC alternatives as well. Very, very strong option here with BingX because they allow you to trade traditional finance as well. So that is super, super cool. So definitely well worth checking all of that out if you are interested in some of those phenomenal offers that are available with the links in the description down below. So really, really nice kind of price action here. If we do end up kind of seeing that triangle start to play out, and again, like, it's not a perfect triangle, right? Like, I can't really draw like the perfect line, but that doesn't really matter, because generally speaking, what we're looking for anyway is just, your series of higher lows, right? And it is unequivocally higher lows across the board here. So until and unless that's broken, then the next thing that happens is we probably just find support in the range. So it's really not even that bad from this short-term analysis perspective. Until and unless that kind of higher low pattern breaks, you can't really say that we're headed down. But these are the things that are really important, is that, like, because the uptrend has been so strong, naturally the reaction is going to be strong as well. And again, those of you that have been with me during the bear market of 22 and so on, even, back in 2018, or, really, really early days for this channel when I was making crypto content, you got to remember that the whole time I was saying, look, when you get these big rallies up, you're going to get big corrections. But on the other side, when you get big corrections, you're going to get big rallies up, right? And you kind of, like, whatever you experience, you're going to get that back in the opposite direction. So, you can choose to, and a lot of people do, but you can choose to have a lack of awareness of this, and then good for you. Don't even come to this channel. I don't even know why you're here. How'd you even make it this far, bro? Or you could choose to have a much more sober, grounded perspective on these things. And then instead, what you're actually going to be interested in is still staying in the trend, right? Like I said, I want to, right? I'm very happy with the profit here on my long and so on, but I just can't close it yet because I haven't been invalidated, right? And if I, decided to get trigger happy and close that long position earlier, well, bear in mind, I opened that back down at $21,000 on Bybit, right? All the way down here. Like, if I decided to just close it here because it was already a ridiculously large amount of money, then I wouldn't have experienced all of this, So these invalidation rules are actually really important to allow you to continue to make money, and at the same time, especially when you start realizing that, look, things have gotten very crazy, you're also going to be interested in those little signs, like where those higher lows stop coming in, right? Like when you stop producing these kind of higher lows and the market actually starts setting a low which is a little bit lower, right? And then you might be able to say, actually, yeah, we're looking at something a little bit like this, because that is probably exactly how it would play out. And again, what we've really got to keep in mind at this stage in this market now is that because of how strong this rally up has been, I mean, look, there was no resistance on the way up. We can't expect support on the way down. We can't, right? And there are good arguments to make with the chart that I showed you where this is certainly possible. But, in order to achieve that kind of support, you've got to, you've got to have really good ground above that resistance level. I'll give you a really good example, right? One of the things I was talking to you about before when the S&P 500 first broke out is that you want to see a nice kind of big breakout. You want to see it like moving up in terms of a large amount of price and across a large time period, because those two things will imply that the market's kind of gotten used to these price levels now, and it's no longer, potentially a fake out, and it's actually like legitimate price action, right? So you legitimize price action by making the price action big, or by going like just staying above for a long time. And in the S&P 500 case, we've done both, right? And that's why I feel quite confident now that if it does pull back, I mean, it might fall below its all-time high, but not particularly low. Like, certainly wouldn't expect lower than this, and in fact probably something a little bit more like this, and then at worst, you get your kind of quick flash and then all the way back up. Like, that's kind of how a lot of the time these things play out, especially with markets like Bitcoin. So I think that's going to be really important, right? There could be support down here in this 50K range, especially because of how we've been holding up. I just think that there's so much kind of pent up pressure now to the downside. There's going to be so much fear, that it could just be really, really quick to come down to some really significant price levels. And I think what's really nice about this is that if we do fall down to levels in that 40K range, we're already looking at a 30% drop, right? And that's huge. That's really big. It can be much bigger, and oftentimes does get much bigger, down to like 40%. But that's actually really good for this market, because in order to produce a massive drop, it's going to take us down to a very comfortable price level. And, that's actually why I don't think it's going to happen. Obviously, either I think we're going to, kind of undershoot it or overshoot it, right? That's usually kind of how these things go. So, that's a big deal. Definitely something that I'm paying attention to. This rally, by the way, is actually faster than before, if I'm not mistaken. It kind of looks faster to me. Let me just double check that. I think it was faster, yeah, like faster than here and faster than here by the looks of it, because it's just like straight the fuck up. So, definitely a very, very compelling, quite crazy chart here. From that perspective as well. Now, take a look at this chart. This is actually the iBIT, iBitShares, iShares chart for Bitcoin, forming a bit of a cup and handle here. You can make funny arguments like institutional traders are only going to be looking at this chart, which is absolutely fucking ridiculous. But, if that's what this is, then you've got a 34% breakout target, potentially taking it up to 40. That would just mean, even more upside for Bitcoin. So, that's just something else which I think is, interesting to take note of. We do have lots of volume coming in on these spot ETFs. So that definitely goes in Bitcoin's favor. And I actually think it's going to get much bigger. Again, for me, my argument just rests on, I just don't see the little guy kind of getting rich off these people. And I've got it's actually very funny. I was bringing this up to somebody who, some of you guys may know already in the crypto space. And I was basically saying today, like, look, the reason I don't see these ETFs being our saving grace is because when, Jamie Dimon, you guys get very passionate about his name. He can just absolutely fuck off. So I really don't care how I say his name. But when he was in the space, talking about Bitcoin back here in 2018, he was absolutely fudding the space. I mean, he was talking absolute smack about this space, and then the price dropped by 50%, and his company was buying down here, and then the price rallied up, and, he's just nowhere to be seen. He's not talking about it anymore, right? So a lot of these people, he's a placeholder. Like, forget him. He's just an example of one of many, where manipulation is going to take place to kind of drive prices lower to make the little guy sell down here. And this is when they're buying to let the price go up, right? And I actually think that happened back in early 2023 and late 2022 when we were down at these kind of lows. I actually think that's what it wasn't actually early 2023 because the entire year of 2023 was an uptrend. So basically just here, I think this is actually what was taking place back then, but obviously we didn't have ETFs, right? So I think it's totally conceivable that we kind of start coming down to some of our key Fibonacci retracement levels, to grab some support, shake some of the market participants out. I mean, imagine the blood if we get that kind of drop. There's a lot of FUD, whatever, stops get hit, and then we just kind of trade sideways for a little bit and then up. Like, it would just make so much sense in terms of allowing those people to actually finally get in. The only argument I've heard for why these people would buy at 60K instead of at half price or 40K, for example, is because they see it getting so much bigger. And to me, I get it, and I think that makes sense, but I think you and I can also level ourselves and just be like, all right, like, at what point are you making sound logical arguments, and at what point are you just looking at this with rose-tinted glasses because you want to get rich, right? And I really think that that's a really important question to be asking yourselves. And again, I can't stress enough because some people are going to miss this. I can't sell. I can't get out of my positions until I'm invalidated. So, I'm not actually acting with this with my money at the moment. But again, it's when you start seeing those lower lows start to get punched in the market, and you're not maintaining that structure of higher lows, that's where things could start getting very dicey. So, short term, definitely looking good. There's phenomenal patterns across the market. Here's Solana now getting a breakout potentially off its 1 hour Ichimoku cloud, which is super, super cool. We've also got Phil, which I was about to trade, but unfortunately didn't quite come down to the entry I was looking for. Also now moving up. These coins are all available on Bybit, which is absolutely fantastic. This free $30,000 they're going to give you to trade with, you can use that on these coins. And you can also buy these coins on spot, meaning like just normal buy and sell for free without paying any fees at all. So that is super, super cool. We've got another beautiful setup on Ethereum. The exact same thing, just hasn't played out as far for Ethereum, which is good because we actually want to see Bitcoin leading the charge, and then we can kind of shove our capital into Ethereum. Bitcoin's dominance still hanging out at these highs, and Bitcoin against Ethereum more or less around the same price levels right now. So I think, for immediate steps for Bitcoin, we've got to kind of start breaking out of this kind of resistance that we're at right now. If we're able to really get above the 63K level with conviction, you might start to see that short-term SR flip where resistance turns into support, and then we kind of bang on that door at 64 and start breaking out higher. That's how that would look on a very, very short-term time frame. And again, that Monday open could be very interesting. Again, I'm not going to try and say that, Monday open is going to mean the S&P 500 starts dropping, because that's not the trend. But again, the S&P 500 is a lot more predictable than Bitcoin, and it doesn't, go up in a straight line forever without, some sort of pullback or pause of some sort. So I do think that is very important. In terms of, kind of high risk positions, you are starting to see some, kind of nice positions develop for Bitcoin, at the lows of this range, especially if Bitcoin were to get rejected up here. This is, quite an obvious kind of buy down here, I think. just because it almost just kind of makes sense given where the wicks are. Maybe not the trade I would take. Honestly, I don't even think I'd take the short up here. I don't like the idea, like I said, of standing in front of this train. But yeah, I mean, that stop loss would be about 2% away. It's not actually that bad, is it? So yeah, I mean, something to think about. Again, with the kind of free money that you're getting, it almost just doesn't matter what you do, does it? But I mean, for me personally, I think both are, they don't sit right with me. They don't quite fit my risk appetite. I've just noticed this, by the way. Take a look at gold. Gold's sitting at 2080. Is that the highest gold has ever traded at? No, it's not actually. It did that recently. Yeah, gold set an all-time high recently, didn't it? Yeah, so gold's doing pretty well as well. So very, very interesting times. The dollar has just kind of been sideways for some time now as well. We're on the weekly, so this is quite a long-term chart here. So there you go, ladies and gents. I hope you have enjoyed this video. You know what to do if you have. Make sure you smash up those likes. Check out the phenomenal offers in the description down below as well, including the alternatives to Bybit with, like, for example, BingX with access to traditional finance. That is super cool. Stocks like Tesla and Apple. But with that, ladies and gents, I'm going to see you all in the next one. I really hope you've enjoyed this one. You know what to do. I think I've already said that. Like, subscribe, bell, all that good stuff. And I'll see you all in the next one. Cheers. Bye.